Alright, I'm just gonna do a continuation from yesterday's video. You could see um, ended up passing the account yesterday off of that winner that I expected because it was just $1,000 profit. I was sitting at $5,200 balance. And yeah, these are my stats. Honestly, they're really good stats. I'm really proud of this trading. I mean, a 55% hit rate, it's not the greatest, but it's solid, especially with this type of risk to reward. So yeah, Express account opened, and I'm gonna get into the trades I took today because today it was a smaller day for me, only $400 profit, but I was reduced size because I took it on another challenge account because I was waiting for the Express account to get processed, so I couldn't trade it. But I was trading half size. Normally I trade 2 ES, that's why it's smaller than normal. But I'm just gonna start with the pre-market plan. Let's just load this up. Pre-market plan. Let's get into it here. So this is what we were working with before the market opened. So without rambling on, the main thing I was looking at today was yesterday's high. So again, this looks like a lot of noise, but it's not. Basically, my thesis was the market spent a lot of time and volume, or specifically time at yesterday's high. You could see there's 3 periods at this high. And usually when we spend a lot of time at a high, it usually gets revisited at some point, which means it's poor. It's the same thing as yesterday. We had that gap down and there was a gap to fill. So that was a good target intraday for longs in my opinion, because I thought it had a high probability of getting taken out today. So that was my main thesis. And yesterday you could see we formed more of a balance there. So basically my thesis was as long as we could hold above this 5199 level, which formed yesterday from the tape, I wanted to look for ways to be a buyer on moves down, targeting this 5217. That was my first trade analysis. So you could see scenario number, let's see. Yeah, scenario number 2, we left a poor high, leaving 3 periods at the high of day. If we can open above this 4199 inside of balance, I'm open to buying the moves down due to the conditions if buyers step in targeting 17s. So let's fast forward. The first trade I took was a losing trade today. I lost 3 points, $150. And I took the market long, so we were above this 9.9 level, and I'll show you what it looks like on the tape as well. But you can see, let me just go to 1 minute chart to make it more precise. Market opens up, and that's annoying. I see some buying on the tape. So basically what I saw is we broke under the low a day, and we basically trapped sellers. There was tons of selling under the low a day. Market couldn't move lower, and then we reclaimed back above this. Remember, above my 5199 level. And like I said, those highs were poor. That was ultimately my thesis. I'll show you the tape so it actually makes sense. Let's go into it. So you could see here, this is what the market looked like. So off the open, I saw some selling activity at the high day. But the way I viewed this is, if there's selling activity or the market's having trouble resisting a price, like I learned from Carmine, the market basically moves up and down to advertised price. So I just saw this as the market's going to have to move down to advertised price. We're above my level, so if I see buying step in, I'm going to buy the dip, speculating we're going to break out about 15s. Even though this was selling activity, I was looking for ways to play long. So you could see this is the low a day, and I updated here. We break low a day, and look at this. You can see this very large aggressive sell order which hits the bid under the low a day. Market should move lower, and then we reclaim back above. So I saw this as potential buying activity, and as long as we hold above this guy, we should take out those 17. So that trade ended up being a loss. I updated in real time. I said this guy got to hold on to price, like this 11's 1050. And remember, this level is going to be key because this is where the analysis for the second trade comes in. So remember this 5-2-11, 5-2-1050s. So we bounce, and then we end up lacking continuation and stopping me out. You can see here for $150 loss. So first trade was a losing trade. I just moved on from it. It was a great trade in my opinion. It just didn't work out, and it happened. So I just moved on. I was still watching the same thesis, and you could see second trade. Look at the difference between the loss and the win. It was over double the size of that. So remember the 5-2-10, 5-2-11 guy? So I saw this as very unusual action. There was a large participant, and I said I was open for a buy stop entry if we could get back above them. So what that means when you place a buy stop basically is what the market will put you in long if you're not in a position already. And basically I wanted to get long if we could reclaim back above the 5210, 5211s. Same thesis, same plan, targeting the 17s. Because I knew if we could get above this large seller or this large participant, this high a day will likely get revisited. Because look at this, there's tons of volume at this high a day. It just looks like to me it wants to get revisited. So that's why I updated here. I'm open for a buy stop entry at 9:40 a.m. when the market is just straight selling off. It looks like this. So what I was basically saying is if we could reclaim back above that same participant, the 1050-11s from earlier, I want to look for ways to play long. Fast forward, I just got filled long, 952, which is right here. You can see on the spike up, market looked like that. I placed my stop loss under 08 and I was targeting the 17. So my stop loss was 07.75. You can see I entered here. Market obviously never came down, hit the stop, pulled back a little, but didn't hit my stop. Starts working out. So I just got filled long and I updated it. And my main thing was like I needed to see us get back above this 15 because you could see there was tons of buying at this higher day. Market couldn't move higher. So I saw this as this potential selling activity. So if we could get above this, I think the 17 target will trigger. This trade pretty much worked out immediately. I was in drawdown for a second, but you could see it was a really good entry. Wasn't the best risk to reward. It was 2R, but you can see it never hit my stop and ended up rallying up where I took my profits at the 17s where we broke high a day. We ended up taking out the high, which I saw as could get revisited. And here, updated it again, and then got out here at 17s. On that quick move up. So that was my second trade. So $150 loss, $312 winner. I was honestly about to walk away after this because I didn't see much, but then right as I was about to walk away, I saw another opportunity. So this was actually to the short side. I didn't have a bias there. I was just going off the levels and I saw a nice setup, so I had to take it. So you could see this pink box here at 5220.75 is my supply zone. This supply zone formed back on May 7th here at this high. We reconsolidated before we sold off, so there was a supply there. And my main thesis though was I was seeing divergences across the board. So what I mean by this is you could see at 10:05 S&P was breaking above the opening high here into my resistance level, but the most important part is look at NASDAQ. NASDAQ was not breaking above the opening high, so that's a divergence. And not only that, I'll also show you the VIX divergence. So there is a ES&Q divergence, and if you look at the VIX futures, you always use a 30-minute chart for this. You can see the first 30-minute candle closed green on the S&P 500. So ES was moving up, and the VIX futures was also moving up, which is not normal. Usually when the S&P moves up, the VIX moves sideways or down, but VIX put in a green bar here usually hints that the up move will be short-lived. So if the S&P is moving up, like I said, the VIX should be moving sideways or down, but they're both moving up. I'm seeing divergences all across the board. And I updated here, we're coming into that level, like I said. Let's just go back to ES, supply zone, chart it out. Alright, we're coming back into this, and then you're going to see, as I updated here, there are offers sitting there. So you can see here, passive sellers sitting there, 315 lots, 521950, another 300 lot basically at 5220s. It's not that significant until it gets filled or it shows intention. So mind you, I'm seeing offers, passive sellers sitting right at my supply zone with the context of the divergences. So we broke above the high. You can see we filled both of these offers. And when we broke above the high, look at how strong this buying was. And then it got shut down and we broke back under the high of the day. So to me, that was weak. We broke above a high, trapped some buyers. Sellers stepped in, slammed back down in my supply zone. And that's where my third trade came into play. Not the best risk to reward. I prefer at least a 2R, but my target was closer because of the lower volatility condition. And remember that 5215 level I talked about? It held. That's where I got out. My pre-market plan was to get out at the 5216 to 5214. I ended up getting out at 5215. You can see, broke above the high, aggressive selling stepped in, and then look at this. Those buyers became trapped. They were underwater. Market moved down, and we got that nice move down to 5215. And I said I do believe this could sell much further, but I just followed my plan. 5215. The reason why I sold there is because my target was in that area, and also remember this level which formed from the tape from these trapped buyers or absorption at the high of the day. That happened to be right at this 5214, 5215. And look what the market did. Remember this 5214, you could call it 5210s to give it some buffer. Market's not going to hold it to the exact tick. We break above it, and that was a really good cover because those buyers from the open, once we got above them, they held. And now we got a massive rally on our hands. And yeah, you could see that was clear buying activity. There's tons of buying here. Market moves down, we break above it, hold those opening buyers, and we get a very nice strong rally. And yeah, those are my trades for today. Despite not the best risk to reward, I prefer better risk to reward on the setups, but I had to take what the market will give me today. I'm not upset with these trades, and I'm still up, I think 3R for the day, so I still think it was good trading. So I just wanted to break that down, and yeah, hope you guys could learn something from it. Just a quick recap. Any questions, comment below. Thank you guys for watching. Like, comment, subscribe. If you guys have any suggestions or any different types of videos, just let me know. Peace.